What's up, observers? You're tuned into the Observe Network, and today we're going to cover the David and Goliath story of the year. This is Observe. Let's go! What's up, observers? You're tuned into the Observe Network, and today I got a very special episode for you. David and Goliath are going at it, and David is winning. This battle is between Wall Street and Main Street. And if you know anything about the stock market, Wall Street usually wins. The big conglomerates usually take advantage of the little guy, and that's how they make their money. But this time, it's in reverse, and everybody's going haywire. And it's very exciting to see because it's time for the little guy to start outthinking the big machine. So let me explain to you what is happening with these stocks. It revolves around GameStop, BlackBerry, and AMC. All three of these stocks were doing pretty bad and expected to fail. So what these big Wall Street tycoons were doing were shorting the stock. For those who don't know the stock market, there is long and there is short. Long is when you put your money into a company saying that you believe that the stock is going to go up, and then you make a profit. You say you buy it at $100, goes up to $150, you've made $50 on top of your investment. That is the basic way that a long is put together in simplest terms. Short is a little bit more complex. Short means that you think that a company is going to go down. So you're essentially saying this company is going to drop, this stock is overvalued, and we need to bring it down a notch, because that's how they make their money. They will sit there and look at a stock, analyze it, and say it's too high, it's coming down, and I want to make money off the difference. Let me explain how that works. When you take a short position on a stock, you're saying that essentially it's going to go down. You go to a broker and you say, hey, I need to borrow 100 shares of GameStop from you. So the broker will go out, he'll purchase that stock, he'll get that 100 stock and loan it to the investor at interest. Now, this investor will turn around and go into the stock market and sell it for what you paid for it. So you paid $100 for it, they turn around and sell it for $100. And now this investor is assuming or has made the prediction that this stock is going to go down in value. Now, if it does drop, let's say it drops in half to $50, then that investor can turn back around and go back to the stock market and buy it for $50. Now, it sold it for $100, bought it for $50, right? And so it has a difference of $50, and that would be the profit. So it'll turn back, buy that same 100 shares for $50, give the broker back its cut, the shares plus, let's say, $10 of that 100. So $60 went back to the broker, and the difference was $40, and that is the profit of the short position for the investor. Now, personally, I'm not a stock expert, so you should seek advice when you're going to invest in stock. But personally, I don't like shorting stocks. I don't like investing in people's failure or setting up conditions for companies to fail. Now, we all know GameStop has been around forever, and it was in a failing position due to the fact that you can now download games directly from your internet on your computer or on your Xbox or PlayStation. So it made GameStop a little obsolete, and there's other companies that are doing the same thing. They're going down because technology is changing. COVID is also changing things at a more accelerated rate. But when you take a position against a company saying that they're gonna fail, and you put billions of dollars into that, other people are seeing the same thing and following suit, therefore accelerating the destruction of that company. But these guys from Reddit, which, if anybody knows Reddit, it is a forum, open forum that people talk and discuss different things. One part of Reddit is WSB, Wall Street Bets. That's where a group of investors, usually mom and pop, retail investors, small level investors, get together and discuss different types of stocks, different plans they have, different strategies. It's just an open forum for people to talk. These guys got sick of these hedge fund managers shorting these type of stocks and costing them money. So they decided to stick it to the man, and they all got together, put their money together, and bought up all the shorts, all the rest of the stock, therefore driving the price higher, driving the price way up so that these hedge fund managers lose money. Because one thing about a short sale, the losses are infinite. You can lose because regardless, even if you buy it at $100, if the stock goes up $200 and $300 and $400, you still are on the hook to the broker for that very same stock. So what they did was drive the price up. They thought it was going to go down so that they can make a profit. They drove the price up and continued to drive it up and hold it there so that these hedge fund managers lose billions and billions of dollars. Now, they've lost a lot of money before. Actually, in 2020, they lost quite a bit of money on Tesla because they bet against Tesla stock and said it was overpriced and it was going to go down. And anybody knows Tesla shot up last year almost double. So they lost over $40 billion. And if this situation with GameStop and these few other companies continues on, they're going to lose more and more money. So David stuck it to Goliath this time. But now Goliath is angry. He is going to his state legislators and the SEC and all these regulatory bodies to put regulation on these platforms that people can discuss stock and stock options and what to do. They're saying it is illegal because insider trading is, by definition, any people that get together to cause a stock to go up or a stock to go down or what we call pump and dump. So, yes, they have a point on that end, but it's okay when they do it. It's okay when Wall Street does it. They don't ask for regulations then. They do it all the time. They've been manipulating Wall Street. Wall Street itself is a system of manipulation. It is all manipulation. When the Fed pumps in money to stop inflation or to regulate certain people with certain laws, that's another form of manipulation. So the only time the rules apply to people, the little guy. It never applies to the big fish because they can't afford for the big fish to lose. Now all these platforms, TD, Ameritrade, all those other platforms are now stopping the sale, the buying of this stock. And they're using the guise of, we're trying to protect our investors from making a mistake, which is a complete falsehood because the free market is there for you to do what you will. Everybody gets into the stock market at a risk. So now they want to protect people from losing when it's the big fish. Because if the big fish lose too much money, it affects the stock market negatively. So they would rather Main Street lose all the money rather than Wall Street lose all the money. Because to be honest, Main Street just got lucky in this situation. This is a falling dagger. And you don't want to be at the bottom end of it. You may have won the battle, but you didn't win the war. Eventually, Wall Street is going to come out on top. These big conglomerates will come out on top. Melvin Investments had to take on another $3 billion from other investment companies to keep afloat due to this GameStop setup that they thought they had such a sweet deal on. But when you're greedy, like Wall Street is greedy, you're going to lose eventually. Eventually, you will lose. Now, the question is, should Main Street keep playing this game? Because they're at an extreme disadvantage. Wall Street has the air of legislature. They're already looking into it. Your Elizabeth Warrens and some of these other regulatory bodies that like to bring forth regulations. They are already setting up something to counteract. And these platforms are being picky and judgmental on who they regulate and who they stop from trading. Because what happens is Wall Street is losing so much money. These hedge fund managers are losing so much money because the price is going higher. So these platforms have cut off the sale to keep it at a certain point. They cut off the sale. So now it can only go down. That relieves pressure off of Wall Street hedge fund managers. So they are also engaging in a form of stock manipulation. But they're going to tell you, oh, it's for your own good. Because the little guy is too stupid, in their opinion, to put this together. But honestly, Main Street got together in a crowd and was able to inflict pain on Wall Street and inflict change on Wall Street. So this is a big testament to what can be done when people stick together to make things happen. This is Javon with Observe signing out.